Hi, my name is Wendy Patton, and my expertise is lease options and creative seller financing. What I'm going to share with you in this video is a question that was asked at one of my recent boot camps, and I'm sure you're going to want to know the answer for it.
Are there any requirements to keep option credit separate from your other money? So in other words, let's say you're receiving $900 a month in rent and you're giving a credit of $200 to your tenant buyer. Do you need to take that $200 and put it in a separate account or not, is the question on this. No, you do not need to in any state that I'm aware of. It is a credit that they're going to get later if they buy. So for instance, let's say it's been 18 months and they've got $200 a month credit. That would be $3,600 credit. It is a credit that the lender or their mortgage company is going to give to them because you're going to put it in writing how much credit they have on this particular property, but you are not actually going to bring that money to closing. It is a paper credit. So let's say they bought it for $120,000. They gave you $5,000 up front. That would bring their balance to $115,000. Then you'd minus the $3,600 as additional credits, and that would bring it to hold on, now I've got to do this math in my head. $111,400, I believe, would bring that their balance to. So what I would do is I would write off my payoff statement to the lender to say, to whom it may concern, Sally, who has a lease option with me at 123 XYZ Street, owes the following. And then I actually put it down like this. Purchase price, $120. Option credit received up front, $5,000. Option credits received for last 18 months, $3,600. Current balance due, $111,400, something like that. So you don't actually have to keep them separate. And by the way, when you receive those option credits, you do not have to pay taxes on those credits until they do purchase that property for you. So I don't want to get too detailed into accounting situations here or specifics, but for those of you that do understand the accounting part of it, what you're doing is you're going to declare $700 as income for the rent, and you're going to put $200 in your liability category. If you're using QuickBooks, I break it down to 900. 700 is an income account, which is rent received, and then 700, and then $200 is a liability of option fees owed on 123 XYZ Street. I keep each property has its own option fee category, so that at the end of the option time period, I know how much credit they receive from me, including their down payment also. That's going to go into a liability category. Even though you receive that $5,000, that also is not taxable until that person purchases the property from you or they walk away from that property.
To find out more about lease options, you can go to whyleaseoptions.com and get a special report, a free report, absolutely no charge to you, called The Top 5 Mistakes Most Lease Option Investors Make. I've been coaching investors with lease options for over 15 years now, and I'm going to share with you the top 5 mistakes most of them make if they don't have the right training and education. So you're going to want to go grab your free report so you don't make those mistakes. I wish you the best in your creative seller financing and lease option investing.